The three silver coins with the highest growth potential in 2026. Imagine holding three pieces of metal in your hand that could multiply in value several times before 2026 ends. These aren't stocks. They aren't cryptocurrencies. They're physical silver coins, tangible, real. And while the world watches the big market moves, these three pieces are being ignored by most, quietly accumulated by those who understand what's coming. Today we're going to reveal which ones they are, why they matter, and what makes them different from any other form of silver you can buy. But before we continue, if this kind of analysis helps you see the market from a different angle and think clearly about your decisions, subscribe now so you don't miss the next reports and alerts that could change your financial perspective. Most people, when they think about silver, they think about bars or generic rounds. They think about weight, about ounces, about spot price, and that's not wrong, but they're leaving out something fundamental. Not all silver is equal under the law. Not all silver will be treated the same way when governments start moving. And above all, not all silver has the same revaluation potential when demand explodes and supply freezes. That's where these three coins come in. They're not the most popular. They're not the ones everyone mentions, but they have unique characteristics that place them in a privileged position for what's coming. The first coin you need to know about is the pre-1986 American Silver Eagle. Many think all eagles are the same. Wrong. Modern eagles, minted from 1986 onward, are pure investment coins. They're recognized, liquid, reliable. But earlier eagles, especially those with key dates or limited mintages before the modern program, occupy a different category. They're not simply bullion. They're coins with history, with numismatic context, with documented scarcity. And that legal distinction could be the difference between keeping your silver and losing it if definitions change. Remember that this content is educational and does not constitute financial advice. Its purpose is to help you think more clearly about your decisions. Why does this matter? Because in 1933, when the U.S. government confiscated gold, they didn't take everything. Collectible coins, those with recognized numismatic value, were exempted. The same logic can apply to silver if that type of measure is ever activated. And while it may seem unlikely today, history has taught us that the unlikely becomes inevitable when systemic pressures reach a certain point. Pre-1986 eagles, especially those with specific mint marks or low mintage editions, aren't treated as standard bullion. They're treated as collectibles. That classification protects them. And in a market where protection is scarce, that advantage is worth much more than the small premium you might pay today. But there's more. These older eagles don't just have potential legal protection. They also have growing demand from serious collectors. We're not talking about casual speculators. We're talking about accumulators who understand that silver isn't just a commodity, but an asset with multiple layers of value. When the bullion market saturates and prices rise, these buyers don't look for the cheapest ounce. They look for the rarest ounce, the hardest to replace. And that's where pre-1986 eagles shine. Their supply is fixed, their demand is increasing, and their recognition is global. That combination is powerful. Now, let's move to the second coin, and this is where things get really interesting. We're talking about the 1,988 Canadian maple leaf. Why 1,988 specifically? Because that year marks a turning point in maple leaf production. It was the last year before the Royal Canadian Mint massively increased production in response to growing global demand for physical silver. The 1,988 and earlier mintages are significantly lower than those of later years. And that difference in supply creates a completely different price dynamic. But the real power of the 1,988 maple leaf isn't just in its relative scarcity, it's in its purity and international recognition. The maple leaf is one of the purest silver coins in the world at 99.99% purity That makes it ideal for both investment and industrial use if that type of demand ever activates. And unlike other high-purity coins, the maple leaf has full government backing. It's legal tender in Canada. That means legally, it's money. It's not just a piece of metal with a nice stamp. It's an obligation of the Canadian government. And that distinction matters enormously when legal definitions start changing. Additionally, there's a geopolitical factor many ignore. Canada is one of the world's largest silver producers, but its position as a producer doesn't protect it from the same pressures other countries face: high debt, growing deficits, dependence on expansive monetary policies. If at some point Canada decides to restrict silver exports or reclassify certain metallic assets as strategic, maple leafs already in circulation outside Canada will instantly become more valuable, not because the silver changed, but because availability changed. And in markets where liquidity evaporates quickly, that availability is everything. But there's an additional detail few mention. 1,988 maple leafs have a distinctive visual characteristic that makes them easily verifiable. Unlike generic rounds or bars without clear marks, a maple leaf is instantly recognized anywhere in the world. That reduces the risk of counterfeiting, increases confidence in quick transactions, and facilitates settlement in secondary markets. When panic arrives and people need to convert metal to cash quickly, recognizable coins sell first and at better prices. That liquidity premium isn't reflected in the spot price, but it materializes exactly when you need it most. And now we come to the third coin. This is the least known, but possibly the most explosive in terms of growth potential. We're talking about the Mexican Libertad from 1,982 to 1,985. These years represent the first mintages of the modern Libertad program, and their production numbers were extremely low compared to what came after. Many of these coins were quickly absorbed by local collectors in Mexico and never entered the international market massively. That means their available supply today is much smaller than official figures suggest. But what makes the Libertad from these years truly special isn't just scarcity, it's its hybrid legal status. The Libertad has no face denomination printed, unlike the eagle or maple leaf. That technically makes it a bullion coin, not legal tender in the traditional sense. But at the same time, it's minted by a government mint with full authority from the Bank of Mexico. That legal ambiguity is precisely what makes it valuable. In a scenario where governments try to reclassify monetary versus non-monetary silver, the Libertad could fall into a gray zone that protects it from extreme measures. It's not clearly money, but it's not clearly commodity either. It's both and neither at the same time. Additionally, Mexico is in a unique geopolitical position. It's one of the world's largest silver producers, but it's also an emerging economy with constant inflationary pressures and a history of monetary devaluations. That means within Mexico, internal demand for physical silver as a hedge against the Mexican peso is structurally high and growing. And when that internal demand collides with the limited supply of old Libertads, prices don't rise linearly. They jump. We've seen this before in Mexican collectible markets. We'll see it again. But here comes the twist no one's discussing. These three coins don't just have value by themselves. They have value because they represent three different strategies within the same asset. The pre-1986 Eagle gives you legal protection and historical recognition. The 1,988 Maple Leaf gives you purity, global liquidity, and government backing. The 1,982 to 1,985 Libertad gives you extreme scarcity and positioning in an economy with explosive internal demand. Together, they form a physical silver portfolio that doesn't depend on a single factor to appreciate. It depends on multiple converging vectors, each reinforcing the other. And that's where most fail. They buy silver thinking about one variable, spot price. But spot price is only part of the equation. It's the baseline, the floor. What determines real gains in physical silver isn't just how much spot rises, but how much premium you can capture above that spot when you sell. And that premium is determined by specific demand, documented scarcity, brand recognition, and legal protection. These three coins maximize those four factors simultaneously. Now, let's talk about timing. Why 2026? Because 2026 is the year where several macro forces that have been building for years finally collide. First, global monetary policy is at an inflection point. Central banks have been trying to walk the tightrope between controlling inflation and not destroying growth, but that rope is breaking. Debt levels are unsustainable. Interest rates can't go much higher without triggering massive insolvency crises, and they can't go lower without feeding more inflation. In that environment, tangible assets, especially those with legal protection and industrial demand, become mandatory refuges, not optional ones. Second, silver supply is under structural pressure. Most of the silver mined today is a byproduct of mining other metals like copper, lead, and zinc. That means when those markets slow down, silver production also falls, even if silver demand is growing. And right now, we're seeing exactly that. Mining projects postponed, energy costs rising, stricter environmental regulations, all of that contracts future supply, just when industrial demand for green technology, solar panels, electric vehicles is exploding. That scissors between falling supply and rising demand doesn't close smoothly. It closes violently, with price movements that surprise everyone who wasn't paying attention. Third, there's a generational shift in how wealth is perceived. Younger generations, especially millennials and Gen Z, are losing faith in traditional financial institutions. They've seen bank collapses, massive bailouts, inflation that destroys savings, and broken promises. For them, having something physical, something that can't be canceled by a bank or devalued by government decree, has enormous emotional and practical appeal. And silver, being more accessible than gold, is becoming the asset of choice for that demographic. When that generational demand fully activates, it won't be a trickle, it'll be a flood. But here's the problem. Most people will wait until the movement has already started. They'll wait until they see headlines, until they hear their friends talking about it, until they feel FOMO. And by then, premiums will have exploded, availability will have disappeared, and the best pieces, the ones with legal protection, documented scarcity, and global recognition, won't be available at reasonable prices anymore. That's what always happens. Markets don't wait for everyone to be ready. They reward those who act before it's obvious. And that brings us to a crucial question. How many of these coins do you need? It's not about accumulating thousands of ounces. It's about having the right ounces. If you had to choose between 500 ounces of generic rounds or 50 ounces distributed among pre-1986 Eagles, 1,988 Maple Leafs, and 1,982 to 1,985 Libertads, the second option will give you more protection, more liquidity, and more revaluation potential. Because when markets move, they move in layers. First spot rises, then premiums rise on recognized coins. Then premiums explode on rare pieces. If you only have generics, you capture the first wave. If you have these three coins, you capture all three waves. But not everything is perfect. There are risks. There always are. The first is authenticity. With increased demand comes increased counterfeiting. That's why it's critical to buy only from verified sources, dealers with reputation, platforms with authenticity guarantees. A fake eagle is worth nothing, no matter how good it looks. The second risk is liquidity in moments of extreme panic. If the system collapses completely, even the best coins can be difficult to sell if there's no functioning market. That's why diversification isn't just between types of silver, but between types of assets. Physical silver, yes, but also access to liquidity in other forms, cash, verifiable digital assets, local exchange networks. Real resilience comes from not depending on just one thing. The third risk is political. If governments really decide to reclassify or confiscate, the exemptions that exist today might not exist tomorrow. That's why the legal protection these coins offer isn't an absolute guarantee. It's a higher probability of protection based on historical precedents. But probabilities aren't certainties. And in a world where rules change fast, the only certainty is that nothing is completely safe. That's why the correct posture isn't blind confidence, but intelligent preparation. Having these coins places you in a better position than not having them, but it doesn't eliminate the need to be alert, informed, and ready to adapt. Now let's talk about something almost no one mentions: the opportunity cost of not acting. Many think if they don't buy now, they can always buy later. Technically true, but at what price? And with what availability? Every month that passes without positioning yourself is a month where others are positioning themselves. And when the critical mass of buyers arrives, prices don't rise 10% or 20%. They rise 100%, 200%, sometimes more in a matter of weeks. We've seen this in previous cycles. In 1980, silver went from under $5 to almost $50 in a year. In 2011, it went from under 10 to almost 50 in less than 2 years. Both times, most people didn't enter until the movement was already advanced, and many ended up buying at peaks just before corrections. The lesson isn't to avoid buying for fear of peaks. The lesson is to buy before the movement is obvious, when prices are low, premiums are reasonable, and availability is high. And then hold. Don't try to time every move. Don't sell at the first 20% rise, but understand that this is a long-term asset insurance, a hedge against what's coming. And if what's coming is what all the signals suggest, a massive restructuring of the global monetary system, then having these three coins won't just be a smart investment. It'll be one of the most important decisions you've made. But there's something deeper here, something that goes beyond numbers and charts. Owning physical silver, especially coins with history and meaning, is an act of personal sovereignty. It's telling the system, I don't completely trust your promises. I'm going to have something that's mine that doesn't depend on your approval, that can't be erased with a click. And in a world where more and more of our wealth is digital, where everything depends on networks, on banks, on intermediaries, having something physical is an anchor. It's a connection to an older, more stable form of value, a form that has survived empires, wars, collapses, and that will still be here when current systems are just history. And that's the real reason these three coins matter, not just because they can multiply their value in 2026, but because they represent a choice, the choice to prepare, to think independently, to not wait for someone else to tell you what to do, the choice to be part of the minority that understands that cycles repeat, that crises are inevitable, and that those who survive and thrive aren't the strongest or smartest, but the best prepared. So what do you do now? First, educate yourself. Learn to verify authenticity, to understand premiums, to identify trustworthy dealers. Second, start small if necessary, but start. You don't need to buy everything at once, but you need to begin building position before the window closes. Third, diversify within your silver strategy. Don't put everything in one coin. Distribute among the three we've discussed, because each covers a different vector of risk and opportunity. Fourth, maintain perspective. This isn't a get-rich-quick scheme. It's a preservation and growth strategy for the medium and long term. There will be volatility. There will be moments when you doubt. But if you understand why you're doing this, if you understand the macro forces at play, those doubts won't take you out of the game. They'll keep you steady while others impulsively enter and exit. Fifth, integrate this into a broader framework of financial preparation. Physical silver is one piece, but only one piece. You need liquidity, you need income, You need flexibility. Don't put everything in one asset, no matter how promising it seems. Real resilience comes from intelligent diversification, not excessive concentration. And finally, share this knowledge with those you care about. Not aggressively, not like a salesman, but as someone who saw something, understood its relevance, and wants others to also have the opportunity to prepare. Because in moments of crisis, having a network of informed and prepared people is as valuable as any physical asset. The coming weeks and months will be critical. The movements we're seeing in monetary policy, in commodity markets, in capital flows, all point in the same direction, toward greater instability, greater inflation, and greater need for real assets. The question isn't whether this will happen. The question is whether you'll be ready when it does. Whether you'll have the tools, the assets, and the knowledge to navigate what's coming, or whether you'll be on the other side watching how others capture opportunities you let pass. These three coins, the pre-1986 American Silver Eagle, the 1988 Canadian Maple Leaf, and the 1982 to 1985 Mexican Libertad, aren't magic. They won't solve all your financial problems, but they are tools. Tools designed by history, refined by scarcity, and validated by demand. Tools that give you options when others don't have them. Tools that allow you to act from a position of strength instead of desperation. And in a world where control is increasingly scarce, where decisions are made for you instead of with you, having those tools is more than a financial advantage. It's a declaration of independence. It's saying, I'm prepared. I understand the game. And I'm not going to be a victim of forces I could have anticipated. The moment to act isn't when everyone is already doing it. The moment to act is now, when there's still time, when prices are accessible, when availability exists. Because once the critical mass moves, once panic or euphoria sets in, opportunities disappear. And what today seems like an optional decision becomes inevitable regret. So I leave you with this. You know the coins, you know the reasons, you know the risks and opportunities. Now the decision is yours. You can act or you can wait. You can prepare or you can react. But remember, markets don't wait. History doesn't pause. And those who win in these cycles aren't those who predict the future perfectly. They're those who prepare for it intelligently. Choose to be one of them.